It looks like tiny. I look tiny.
Morning, everybody. Thanks for tuning in to our weekly market update. Today I have Melanie and Kayla here with me. How are you guys?
Good, thank you.
Pretty good, thanks, Nick.
What's been happening in the world of property management this week, Kayla?
It's been pretty busy actually.
Yeah.
We've had a few appraisals, which has been good, and a lot of applications coming through. So
Yeah.
just the usual for us, I think.
Yes, yeah.
Our board is slowly going down. We
Yeah.
had 9, but now we're down to 5, with potentially a few of those approved this week. So
Okay.
it's good.
And how's the winter weather affecting everybody moving in and out of houses and staying put and staying in their leases?
It's slowed down a little bit. So a lot of tenants are staying put. They're
Yeah.
not wanting to vacate unless they've purchased a property, but or moving into state. We've had a few in the last couple of weeks, but mainly they're wanting to stay put.
Okay.
I've had a few interesting questions recently in relation to furnished properties, which I know in the past were definitely kind of a no.
Yes.
Is that changing?
It has. It definitely has. We've had probably 3 in like the last 6 months where we've been able to get a property a tenant through for fully furnished.
Yeah. Interesting. That's quite a shift.
It definitely is. We have had a lot of discussions with owners about that. Obviously, it's not a huge market for it, so you're not going to have a lot of people through like every other property. But it's definitely people looking, especially people coming from interstate. You know, they can come straight over, move in, especially if they've got jobs over here. Then that way they can start their jobs and then look for something. It isn't long-term leases all the time.
No.
It's 3 or 6 months, so it is a bit of work. But definitely.
If you're willing to find that little niche. For some people it can work.
Yeah.
Interesting.
Yeah.
All right. And what about the sales market, Mel? What's been happening over the last week or two?
We've still had some sales in the last week or 2 weeks. Some things that have sold and achieved some good prices still. I think we're seeing a bit of a slow. I think winter is part of that. It's generally a little bit slower, but definitely still those attractive ones are getting interest. I know we had some good turnout at your property down in Verona Sands at an open home on the weekend.
Yeah.
So again, that's a pretty high price for Verona Sands, and Verona Sands is a long way out. It's a place we wouldn't used to get a turnout to an open home, and we got a good turnout there. So, still properties that have some appeal are getting interest. They're still getting a few offers in on places, but I think we've definitely seen some pullback from that real height with that real buyer activity. It's slowing up a bit, I think. Yeah. Have you seen that?
Yes, I guess probably buyer confidence isn't high. Buyer interest is still very high, but confidence levels are low. So I think with the media and everybody focusing on the couple of factors, interest rates and inflation, the negativity out there is really high now. So if something is priced correctly, then people are still, they don't feel the risk is there. So they're going really strongly, and we're getting a lot of offers and a lot of interest in the properties that are attractive to a buyer where they see little risk, where properties that are less attractive and they see a high risk in either recouping their costs of purchase or things like
so attractiveness in what they offer or price. So if they're a really a great property and that they feel like they're not going to get something like that again, or it's a great price.
So the unique properties we're probably seeing an impact less than a standard 1970s brick house that there's a lot of, or something that then price probably needs to be a bit more important in that. So where an architecture designed or 125-year-old character house or something, they're probably going to be impacted less than the things where So look, it's very interesting. It's still a much stronger market than it was probably 4 or 5 years ago that we were in, and the prices are still really great, I guess. In that
definitely still got some good cash buyers out there who are snapping things up quickly.
Who are actually enjoying not being fighting against
That's right.
So they're having 1 or 2 people to fight against is a bit easier than 7 or 10. So so there's still a good amount of people in the market, but I think the negativity out there will continue to keep a lot of people on the fence, and
until we see where it's actually going to shift or not, or steady or what have you. That's right.
Yeah, it's interesting. I think a lot of the normal people moving into houses, it's not affecting much. It's probably affecting builders. We've noticed a big fall off on unit development type sites, and probably still get some good interest in the blocks of land for people to build on, just a first home or something. But investors are probably on the fence now. Cash is on the increase with the banks, so looking at that's going to increase.
Return on investment from a rental point of view is not where it was.
Where if you've been getting 0 or 1% on your investment with bank type and shares versus 5% or 3% versus with a property, then that's a big difference. Whereas that bank interest gets back up to 2 or 3%, then the difference in having land tax and rates and things, it'll get closer. So you obviously don't get the capital growth with the bank interest still, which you get with a property. But for some of the people who are older and not likely to own a property for a full cycle, then we'd see something like that where they might shift back out of the property just into cash, so they know it's a measured approach to actually say, hey, we've got this much money left, we're going to use this much a year. And that, so there'll be a little bit less, which I don't think will affect our market much. I think it will affect some of the lower socioeconomic parts of Hobart a lot more, where predominant sections of the market are investor driven, and we see as investors will sell out and move into cash, then those markets will probably have a fall off, where I think the areas around Southern Tassie where you've got strong actual buyer, people wanting to live there.
Owner-occupier
type. I don't think that fall off will be as bad. It'll probably impact some of the coastal areas a bit more, which traditionally happens on the backside of the boom. Places like further out over Southports and up the east coast and Orfords and Swanseas and places where everybody sees the recession hurting a little bit more than shacks and caravans and boats are some of the things that will go first, where investment properties, you probably hang on to those because they're making you money, where some of the things that aren't giving you a return.
Lucky for us, Dover has some good investment properties.
It does, it's got a few.
Good return on investment in Dover. So. But some interesting times. It's going to be good to see what happens in the next few months. I
think it's pretty confident. I think we've seen a lot of the slowing that we'll probably see, so I expect it to kick on fairly well in the springtime, given the slower period.
Just got to get that buyer confidence back up, and I think that will happen when they realise the bottom's not going to fall out of the market.
That's it. Cool. All right. Thanks everybody for tuning in. I'm sure we've heard you up for long enough today with me rambling on about things. So we'll see you next week on the update.